Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 13, 2015. Inside the numbers tonight, we're going to take a look at the SPY, the E-mini futures contract. It was Whipsaw Wednesday, and that's what we saw, but to a real lesser degree. There was a tight range in the market today. Not a lot happened. Crude oil hit a little bit of a slick today up at the highs. We'll talk about gold, had a nice day in the sun, and the bond market and interest rates. We have no bottom yet. We're going to talk about that, and I've done some work on that, so I spent a lot of time on that this afternoon, so we're going to let you know what I found there. And the U.S. dollar, same deal, did some work there, and we do not have a bottom yet there, but these markets are both setting up for wonderful trades. We're just not at the levels yet. All right, so let's flip over and take a look at the SPY daily chart. I know this looks like a kludge, but I'm going to clear it up in a second for you. I just want to remind you what we're looking at. By the way, nothing happened in terms of the upside or downside, support and resistance levels from yesterday to today. The market was basically flat today, so there's been no change in what we're looking for on the up or the downside. But what I do want to show you is, while the market is trading in a relatively narrow range, you can still take advantage of it, and it's just something I wanted to point out today. And I had these Fibonacci retracement lines in here last night, and let's just take another look at what happened today. But let's look at what happened from the 10-minute chart perspective, okay? So this morning, we go up, and it looked like we were going to start higher and looked like maybe we could put in a little bit of a bullish day and maybe reach some of those higher price targets. And this morning, we were over 2105. And remember when I've been telling you that 2105 is a really, really critical level. Let's just flip over to the E-mini contract, and let's show you that. So look where we were. We shot up in the early morning hours, and we were above 2105. Okay, but we could not close above there. What was the closing price here? We did 2105.50. That was at I'm sorry. We're looking for an hourly close. Pardon me. I realize I'm on a 10-minute chart. Let's look at the hourly. Okay, so this is the first hour of the day, and we closed at 2102.50. So as you can see, let's go back to the intraday. So you can see that as soon as we reach that 2105, and you can see we got a little bit higher, but you can see how much of an important level it is. We just melted away, right away from that level, right? So, but let's go back to the 10-minute S&P SPY contract. Pardon me. So let me show you what happened today. So we make a high, now we come down. Now you're at the 2.5 retracement from the fib level that I drew from the lows to the highs, right? Remember where this level comes from. This level comes from, this is a good learning experience. If you ever want to trade intraday, this is good stuff to know, because this stuff works any time frame. The 10-minute chart pattern works on an hourly chart, it works on a daily chart, and it works on a weekly chart and monthly chart. It just takes longer to play out. Intraday, 10-minute chart, you're looking for a move that's going to take, anywhere from a couple of minutes up to a half hour, maybe 40 minutes, maybe an hour, but not much more than that. Okay, so here's that low up to the high. Okay, now let's go into the 10-minute chart. Now, we're still working from those low to highs. Why? Because they're still valid, right? The market is still in that range. We're still retracing some of that move. So support becomes resistance, and resistance becomes support. So we come down to the 2.5 retrace. We bounce off of it, but I didn't play that level because that's, in my mind, that's minor support, even though there was a pivot high here. Did not play that. But when we broke through, I was looking for the 382 again, right? Broke through the 382, you take a trade. Look what happened. Nice bounce, made some money, continue up, bounced again, continue up, bounced again. Now, the more times you bounce off this line, the higher the probability is that you will break through that line, okay? But, again, when you get into that 10:30, 11 o'clock, 11:30 time frame, you should consider the market to be in light volume, float higher, buy the dip mode. So that was another one where that was a good trade. Right up into the underside of the 2.5 retrace, resistance, melt away. Again with the 382 retrace, bounce off of it. The moment, the 10-minute candle, you close below the 382 retrace, that's it. It's over. Okay, it's not coming back, in my mind anyway. We went that lower, and we did recapture it, but that's it. I'm not looking for that. I'm not that good, right? So as soon as we break through the 10-minute and close below there on an intraday basis, I'm looking for the next level, which was the 50% retrace. So I would have been buying the spiders or the ES contract off this level at 209.33 or a pierce through it. So anywhere from 209.33 to 209 and a quarter, I would have been buying this level for another bounce up, but that's not what happened, and that's the story. So just wanted to give you an idea of how the intraday market can be traded, and just a little tidbit. But other than that, the levels are the same, right? Let's go to the E-mini. Those are the good levels, right? 205 is the level. We've got to close above 205 on an hourly and then daily closing basis. And really, at this point, 1185 on a daily closing basis is your line in the sand in the June ES contract. That's it. That's really all you need to know on the downside at this point. If you close below that level, some of the other levels we talked about will come into play. If you go to the the daily chart, okay, this is 2085 is the line in the sand right now. You see how yesterday we pierced through that and then we rebounded. Then you have 2070 that comes into play. 2055 will be ultra important. 2035 will be extremely important. And if we break 2035, you're probably going down to the 200. I don't anticipate that happening, by the way. Between now and Memorial Day, I do think some of these other levels will get hit. I think there'll be some downward pressure in the markets. But after that, I'm expecting more upside in the market. So that's where we are. Let's go over to gold. Let's talk about something else for a change. Check this out, right? Gold finally had its day in the sun, right? We had an up day in gold, huge up day, almost hit. What was the high today? Let's see. The high today was 1218.50. Okay, so what have we been talking about? We said that we had to clear 1205. We gave you the exact number, which was 1207.40. So we said you got to clear 1208. Well, we rushed through 1208 anyway, and then we came into some resistance really around this high at 1215. Okay, we had 1212 was an important number, but since we got right above that and we rushed through that number, then 1215 was the next area, 1214.90. So I said we had to close above 1215, and we did that. Okay, so that's important. So what happens next? Next, we're going to look for 1225 on the upside, and we're also going to look for 1230 to 1231. That's really the number that this represents here, 1231. So we're going to look for 1225 and 1231. There's just a cluster of resistance in this area right here. You see this pivot high. You see this all this chart consolidation here. You see the gold bouncing off this level, bouncing off this level, bouncing off this level, came into it again, broke through it, went back to that level. Okay, that's going to be extremely important resistance again. We'll ultimately get through that level, but we're probably not going to do it on one shot. So you can be long gold, or better yet, you can buy gold if it gets down, if it shimmies down to 1207, 1208, I'd be a buyer. But you can be long gold with a stop on an hourly close below 1207, 1208 for the ride up to 1225 to 1230. I think that's okay. You just have to be careful because you're getting in late in the game. But I think those numbers will be hit. In fact, I'm calling those numbers target areas. Not necessarily. They will be resistance, but they're targets, which means I expect gold to get up to those levels. Let's go over to oil. Oil did pretty much what we anticipated. Oil got higher today. We got just under 62, and then we backed off. And I don't know, it's getting tired. The more days we don't get to the 64, the less likely it becomes. That's just the way it works. But what we did was we closed the day just under $60.50, and that was bearish, and we're a little bit below there now. $60.50 represents this green line, or the green line represents $60.50. So we have another line of defense, which is going to be 58.63. But you know what? At this point, I wouldn't necessarily be long with much wiggle room in this market looking for 64. You know, if we come and we confirm, meaning hourly closes above $60.50 again, then maybe we'll look for higher prices. But at this point, it looks a little tired to me. We may see them, but I don't have anything definitive that's a high probability that tells me we're going to see 64. But we have to wait for the market to give a pattern. If we came into the 58.63, which is the upsloping 20-period moving average, that may be, and how we came into there would tell me whether or not it was suitable for a long trade. But until that happens, we'll just stay on the sidelines for now. But that was a good trade up to over and above $60.50, and what your staying power was depending on how much you got out of it. That's not an easy trade to be had because oil is whippy. It's a little volatile. Bond market. So the bond market is not good. Okay, the bond market has to wait, or we have to wait for the bond market to tell us it's putting in a low. It just hasn't put in a low. It was another weekday. This is the TLT, another weekday. In fact, let me show you, I've done some work in the bond market today. This is the yields. And I just want to show you the bond market looks a little bit different than TLT. So I'm going to show you what I'm looking at here. This is a weekly chart, but actually, you know what? Let me see if I can bring up a different chart. I want to bring up a continuous chart for you. It'll just give you a better visual on the longer term picture of what we're looking at here. Okay, this is a monthly chart. Okay, you see the breakdown here. This is a big breakdown. Okay, this is 1, 2, 3, 4 months that we've been going sideways to down, mainly down. Okay, this is coming into some major support at these pivot highs here. Okay, and then this pivot low where this level was defended. So this was resistance, and then it was support. Okay, this level here. Okay, and then it was resistance and support. It should be support again. And if we just zoom out, or zoom back in a little bit on the weekly chart, you can see that we're coming up into the 200-period moving average on this continuous contract, and this pivot low here, pivot high, pivot low. So we should be finding support, but going back to the daily chart of the TLT, I really don't want to take a trade here until we have found a definitive bottom. And what that means, and it always means the same thing, whenever we look for a market putting in a bottom, what we want to see is a high volume day. We want to see a low made. We want to see either a market finish on the highs or close to the highs, or we want to see some kind of a bottoming signal, a doji candle, a reversal candle, something on high volume that tells us that the market's putting in a bottom. So right now, this is the weekly chart, right? We're going to come into some good support here, but if we go back to the daily, there's nothing going here. So we may have to wait to come down either into this area. In this area, I've calculated this. This is a number, right? This is not willy-nilly. 115.43 is a calculation that's important. And should we get to that and put in any kind of a reversal or begin to put in a reversal intraday, I will be watching that, and that will be a great trade. But for now, it's a little bit not ready yet, right? I had some... Oh, that was on the dollar. All right, so let's just look at yields. Yields on the monthly basis, it looks like they might want to rush up into the 20-period moving average. Was at 2.4. This is the 10-year yield. So when you coincide, the 10-year yield looks like it wants to get to 2.4. But here's the deal. Here's something important. Pay attention to this. 2.2 or 2.213. If the month of May closes above 2.213, that's going to be very bullish for yields, bearish for bonds. Just write that down. Keep that on the radar, and we will check back here after the month of May is closed out. But going back to the bonds, TLT, sorry, that's what we're looking at. So I've calculated some stuff. In fact, these are no longer needed. Okay, this isn't needed anymore. Okay, even this isn't needed anymore. Okay, you see where this thing is just painted through these lines, and look at the sell-off in the market. See, what we're doing is we made a high, okay, we made a low, we tried to rally, and we made a lower high. Now watch this. Think Fibonacci retracements work? I don't even know what the numbers are right now. I'm just going to draw it in and see. Okay, let's see from high to low. What did we do? We made a high, then we made a low, and after we made the low, as we were rallying, what happened? The market stalled out at the 382 for a day, not much, continued up over the 50, stalled out at the 50, not much, one day, rushed up to the 618 and backed off, tried it again, backed off, tried it one more time, backed off. You think these numbers are important? You better believe they are, okay? So I got this number from a longer time frame, and I'm here to tell you it's important. 115.43 on the downside. That would be a very, very important level for the TLT, okay, the bond market. Let's go over to the dollar, and we'll wrap it. Here's the deal with the dollar. Same deal as the bond market. No bottom. Looking for the same thing we're looking for in the bond market. I'm not going to rehash the whole thing. I'm just going to give you the levels, okay? This level at 92.88 or 92.89 on the dollar is good level. It's good support, okay, but it's not the one I'm going to be looking for. Why? Because we spent too much time up in this area. You'll notice how I took our channel off, okay? I took the buy zone off because we're done with that, okay? It bounced. Anybody that took that trade had a nice profit, okay? However, we rolled over again. Now we're looking lower. We're looking for lower prices. This should be good support, but it may only hold for a day or so. But if you want a longer term hold, we have to look lower. Better support, right? Better support right here. These are numbers. I did some work on this. This is a number, okay? 90.169. It's a number. Through the 200 period moving average, 90, we'll just call it between 90 and 90.50 should be wonderful support for the dollar, okay? The dollar is not in great shape. Okay, look at this. Okay, the dollar is rolled over. But, see this downsloping trend line? I'm going to get closer to where I'm looking at here. Okay, you'll remember this. I talked about this a long time ago, and I kept it in there. This downsloping trend line was the breakout. Okay, maybe, just maybe, pardon me, just maybe, get back to that and test that trend line where the breakout came from or close to it. And if we do, by the time we got there, everybody would be telling you the dollar's collapsing again. We saw the highs in the dollar's going down, gold is going up, oil's going up, the Fed is printing money, all that stuff will be talked about here, okay? But it's not true. It just would have come back to retest the downsloping trend line. This was a head and shoulders breakout. If the market comes back to test this head and shoulders breakout and stays above it, guess what? All systems go, green light, okay? That's where we are. All right, so I gave you a little chart education today. We'll flip back over to the ES contract. Market's still open here. It's in the aftermarket session, but I'm doing this video a little early. And market's recovering a little bit, a little uptick, but nothing to write home about. I'm David Frost. Hopefully this is helpful, folks. Hopefully folks are able to learn something, put this information to use, and actually make some money with it. Okay, so again, I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.